Greetings and salutations, test takers. This is Series 7 Guru coming to you from my studio, off-grid, undisclosed location with an explication request. You're going to get at least two or three parity calculations on your Series 7. You can't be fumbling around with calculating parity. If you have an explication request, send it to explication request at guruexamprep.com. More than happy to help you out. Here's the request. An investor purchased a newly issued convertible bond at par. The bond is convertible at $40. 3 years later, the underlying common stock is trading at $50 per share. If the investor sells the bond at $50 premium over the parity price, there is. All right, well, let's take this. First thing is when we get the conversion price, we need to establish the conversion ratio. I joke. Whenever I get a question and it says conversion price, I go, bastards. I need the conversion ratio. That's based on par. So we take par, 1,000 if it's a bond, 100 if it's a preferred stock. We divide by the conversion price. Now we're back in business. We have the conversion ratio. It says the stock is at 50. So if I can turn this bond into 25 shares of a $50 stock, that means my bond is equal to 1250. Parity means equal. That's what the word means. Parity. There's a lot of parity in the NFL. That means a lot of equal teams. So it's worth $1,250 worth of stock. So that's kind of cool. It says if the investor sells it for $50 over parity. So we had to calculate parity to figure this out. Even when they don't ask parity, I mean, I would do parity because it usually is kind of where the question's heading. So anyways, we have parity and it says it's $50 over that. So that means we sold it for $1,300, right? So we paid 1,000. We sold it for 1,300. We've been at risk for more than 12 months. So that is a long-term capital gain. It makes sense that we would sell the bond rather than convert into the stock. I mean, if we're done and we're out of this investment, because if we, convert into the stock, we'd be converting at 52. So that would make no sense. Let me just figure out. Yeah, we'd be paying the equivalent 52. So whoever does buy it from us at 1,300 would be parity of the stock would be 52. All right. So anyways, hope that was helpful. Can't be fumbling around with parity here. We need to do parity of the bond. To do parity of the bond, we multiply. To do parity of the stock, we would divide. So we take the current market price of the stock times the number of shares, the ratio, that gives us parity of the bond. If I ask you for parity of the stock paying 1,300, that would be current market price of the convertible divided by 25 shares. And parity here for the stock would be 52 based on a market price of 1,300. All right. Well, remember, inch by inch, your exam is a cinch, yard by yard, your exam is hard. And I'll see you for the next explication request.